everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we're here on March the 2nd, 2020 with the Forex market daily market analysis and live trading webinar for you. We just want to show you our disclaimer real quick to remind you that this video is for illustrative purposes only. And with that, we're going to go to our live screen here where we have the Forex-Trading-Unlocked.com website already pulled up, and we already have our workstation page pulled up as well. We're going to skip past the economic numbers, not that they're not relevant this week, but right now we have something really shaping up that we haven't seen in a while. The Euro US dollar has been trending really nice off of this low. We had a buy signal here, this bullish engulfing line over a week ago that has manifested into quite the nice trade. We have blown through our extended upside targets for this buy signal. We had been looking for a corrective rally. That signal gave us the spark for the corrective rally, and now it has completed its momentum as far as our target objectives. So, and they've gone so strong that we've been able to just raise our stop instead of just taking the profits out at the target, because now we're above it. So we got to stop in right below the low. If we have a reversal of fortune today and gets back to those levels, well, that would be very negative. I don't think you're going to see that, though. However, one thing is for sure, the dollar index is in the dumps, and that's most likely because of the move that we have in the euro. Remember, it's the biggest component of the dollar index. And also some of the other currencies are gaining on the dollar too. We shall go over those as well. We do have some signals that are starting to shape up, so this may be the end of this counter trend move. Remember, the Euro US dollar had been in a bear market. Now, obviously, we have made lower lows and made higher move highs as of today. So today is a very big day. It doesn't make us a bull, but it definitely takes us off the bearish campaign to a big wide neutral trade. One thing to take note is today's range, let alone the range from last Thursday. These are epic days. They were over $1 ranges each of those days, and as you can see anywhere on this chart, we don't have anything that was like that. In fact, you have to go back to August to see something like that. So the volatility in the euro has gone from being very tight, no matter what the other currencies were doing and the dollar was doing, to getting very, very volatile. And Friday was a swing trader's delight if you're an intraday guy or a range trader. For the bulls and the bears, though, it was a tough one on Friday, let me tell you something. Today, since Sunday opened up, the market has been, I wouldn't say a one-way freight train higher, but it's definitely been a very aggressive bull. Continuing to press higher move highs today into the U.S. session. We shall see what happens with the stock market today and see what kind of a lead the U.S. markets give the rest of the world. Right now, we're only a little over a half an hour into today's trading, so we don't want to get too ahead of ourselves. We have a lot of, first of all, the week's just starting, and we have a lot of time left for the trading day as well. So right now, the dollar is under pressure. We're going to look at this $1.1098. You see this yellow line here, this last lower move high, which we had taken out today. This is our directional pivot. Trading above a 110.98 keeps us in an aggressive bull posture. Targeting 112, the 112 half areas to challenge this last significant high in the marketplace. Now the question is this just, we went from being just a correction to now this is a full-blown rally going on with the Euro US dollar. But unless we take out this 112, like basically what was this high here? This was 112.39. So we have just a little bit, more than $1 to go. If we take out those levels, well, that definitely has us on the neutral to higher campaign, where we would be looking to buy breaks and look for a signal to buy into, or definitely be very careful with selling into a move up there. This has been quite the move. Now remember, markets go out like they came in, so people are very surprised at the velocity of this move. But if you look at the symmetry here, how this market especially had broken down in the beginning of February, and then kind of like almost on, let's see, we started the move on February the 3rd, we bottomed on February the 20th, and then obviously here we're at March the 2nd, we've come full circle. Now as the market collapsed, you can see that velocity, we had made that up over the last few sessions, and there we go. Markets come out like they go in typically. It's a direct reflection. Now that gives us, that is completed. So now where does that leave us? Well, very likely is that we might start to see some of this, a little bit of a sideways trade developing, most likely around this pivot of 110.98. So the swing traders and range traders are to see some really good opportunities. Not that I'm saying that this bull is not going to keep on going, and I'm not trying to call it top, but remember, our buy signal gate yielded us the turning point here. We had reached our target objectives and blew through it, especially on the Friday, settling very, very strong and giving us a lead on an extension. So this is where you let your profits run. Now, usually you take your targets and you hit them, you get out. But with this extreme move where we blew through them, we could put our stop at our high point. So no matter what, we're maxing out our trade. So we were short the U.S. dollar Swiss, which we're going to get into now, which is also capitalizing on this same move against the dollar. So right now, remember, aggressive bullish posture here. Keep your stops tight. I'd look to start raising them, and take your profits if you put on any pullback, and then look for another reason to buy into. Remember, what we have here is we've made a significantly lower move low. We've taken out the last lower move high. So all we're doing is we're going neutral on this. We're not getting all bullish, even though we could go up to $1.16 for all we know, But right now, the velocity and the direct reflection has pretty much maxed out. So we'll see, today is the beginning of the week. We have a very aggressive move. And remember, the euro hasn't had days like this in a very long time. So it's not that this is abnormal. It's just abnormal for the past 6 months to a year. The fact that we've done this doesn't mean that we're going back to a full swinging US dollar market like we're used to have. But we also could be. So we don't know yet. Right now, we're going to have to gauge on the closes, and you'll see as we get into some of the other markets, we're starting to get some patterns here. And so if we have some either divergence or continuation of trends, we probably will get some good confirmation from these other signals. So here's your euro US dollar. Once again, remember 110.98 is your directional pivot. Now we're going to go to the US dollar Swiss, which we had been riding that trade also to the short side. Just as the euro had been rallying, we had this bearish engulfing sell signal that had happened at the same time when we had the bullish engulfing line on the euro US dollar. Both trades now this one had completed itself already 2 sessions back. This one also had dropped to the lower point of the range, giving us an opportunity to do the same thing with the euro. However, as we lowered our stops, we had it as the close after we opened today, and we were lower. We had moved it to the close of Friday, and then we had down into the open from today rather, and then it snapped back. So we are actually have gotten stopped out of this trade. So we're already out, and still bearish. Not saying this trend is over. It's just for our trade, we had blown through our targets. We had made more than we had looked for this trade. So you don't want to get greedy. Now the one thing that's nice that you can see here is that we had also taken out this trend line here. So as of today, like we settled right on it on Friday. You can see what has happened as of today. So very, very bearish, the US dollar Swiss. The Swiss has been a bull against most currencies for quite some time. We had always been looking at this as just a correction that we had fallen off of, and now the question is, how far can we go? We've already probed some very good lows. To see some consolidation here and a slight pullback for a little bit is not outside of the realm of possibility. I mean, anything can happen, but that is a very good chance of something like that snapping back. Remember, the U.S. dollar has been breaking now for days. So after it's been in a very big, strong bullish correction or bull move for most of this year. So now the U.S. dollar Swiss, the dollar has gone negative versus the Swiss on the year for the first time in over a month. And this is the one currency also, remember, that hadn't been trending very weak against the dollar. The dollar has been beating up a lot of currencies, or had been for this the beginning of this first quarter and into this year. And now this currency here has shown its resiliency, and it is a bull. So this is confirmed newer move lows as of today, because Friday we hadn't done it. As you can see, we were right on the cusp of making lower move lows, and then here we go, boom, we got it confirmed today. So this market is definitely neutral to lower. The bear trend is in place. So we have 2 major crosses versus the dollar that are gaining on the dollar right now. Now here we have the British pound. This one's a little bit of a tough one to gauge now. This one's been in pretty much sideways trade for months, but over the past month of February, it had spiked a nice high, and then ever since then has been making consecutively lower move lows and lower move highs. Confirming that again on Friday. Now you can see that we're actually inside Friday's day. We'll see how we settle. This market is neutral to bearish. We are not looking for about any type of support right now because it's just been grinding. In fact, we're right here where we had taken out. As you can see, we're trading right on a key pivot that's holding this sideways range trade. So we have to see how we settle today. If the pound US dollar falls apart and especially makes a lower move low today and settles down below, let's see, the low on Friday was 127.25. So anything below there, that probably would have us saying that this bearish trend here is not just starting, it's in full motion, and we could probably see a correction that would get us back down to this 124 down to 122 even extreme on a slide. So dollar strength may continue against the pound, so you're going to have to be very leery of the dollar index. If the euro stays strong and the Swiss stays strong and the pound goes weak against the dollar, that's going to have an impact on a dollar index. The dollar index might start to become a very choppy indicator for currency direction and even dollar direction if you're looking to use that as a gauge. But right now, you know that dollar weakness is prevailing, not showing itself in this market, as you can see over the past few sessions. And that's the thing, is this market's not pounding new lows, but it is lower every day trying to ride support, whereas the other markets are doing the opposite versus the dollar in the major currencies, crosses in Europe. Now we're going to go and check out a market that has been swinging like crazy. We have the US dollar Japanese yen trade that had made this nice higher move high a little over a week ago, and look at this. This market just fell out of bed last week, and then on Friday, look at this volatility. It made a lower move low. This market has been a slow grinding bull for months on end, and then we had this nice explosive rally. We were looking for a target of 112 to 112.5, not to really manifest itself pretty much until later this month or into the beginning of April, because the way this market had been trending. And we had this explosive market, and now we've collapsed. Now here's another thing. Markets go out like they came in. So this market did the same thing, but then it extended it out on Friday and into today. So the question is here, where do we go with this one? Right now, this is a wide, loopy range trade. We're looking to try and find support. Right now, we don't have any type of signal confirming anything. I would be very, very leery of trying to buy into this move until you start to get a really good signal, because this market has made a higher move high with a lower move low on a very extreme volatile basis. This could be the turning point for the US dollar yen. So just if you think about the currencies that we just looked at, if the US dollar versus the euro and the Swiss are just in corrective moves right now, then the dollar strength should come back in a big way. Now, this market had been a bull no matter what was going on with the dollar for now over half a year. What happened? What has changed? Well, we know the fundamental going on with the coronavirus is definitely something driving this trade. Is it going to knock this thing around? Not necessarily, but the question is, how much do we have to the downside? I don't think we have much to the downside anymore, but I don't know if we're going to be able to rally back like we collapsed here and then come out and take out this 112 area and make higher move highs. I think what we're very likely to do is somehow start to grind on support. As you can see, we've fallen through what has held up this market for a while, although we haven't taken out this low over here down. What is this? This is at 106.48. So we still have a little bit of another whole dollar to go for support. As you can see, this market opened lower, had a very nice rally today, and now is still just hovering above its lows. Positive, but still on its lows, and even below the low of Friday. So this market's trying to get some bullish support. We'll see what happens. I think you're going to have to wait for a signal here. If you're an aggressive bull, you can jump in here. You can jump in anywhere, obviously, but I would use caution because there still could be upwards of a nice dollar before this market starts to find support. And as you can see, the volatility is here. So for range traders buying into lows and trying to sell into new highs, I think you guys got a good chance. Aggressive bulls, I think you have opportunities. Just be careful with what your risk is. And bears, I'd be very cautious as well, because it is a sell rally forecast, but the question is are we going to take out the more lows before we actually start to get a corrective move to sell into? And it's going to be wide volatility. I mean, look at Friday. We had a range above 109.5 down to 107.5. That's a big, big range for the Japanese yen. So we had a crazy week last week in the currencies. extending trend moves against the dollar, and with just insane volatility on Thursday and especially Friday and Friday afternoon, which is very rare when most of the markets have been closed around the world. The U.S. markets were obviously busy, but pretty much not. The volume was there and they had been selling off, but the thing is the currencies were swinging all over the place. I mean, even on an intraday basis, we have not seen the euro, let alone the Swiss, trade the way they have in a very, very long time. The euro especially, it's only had a couple days like that in the past 8 months to a year, and that's how it used to trade all the time. So I'm looking forward to seeing how this manifests over the course of the week. In fact, we're going to go and check out our trades real quick too. As you know, we have on our MT4 platform, we are still long the euro US dollar. You can see we have a stop now at 110.30. And then we also have on the just the regular Forex.com web trader, we have still our long position. Also here, we've raised that stop up to 110.49, so it's just above the open price of today. And we're looking to, these are way above our expected target zones already after what happened on Thursday. So we've ridden this trade. Now we're, we've gotten extended profits on it, but we're not. We don't want to be pigs. We got to be a pig about it, not a hog. So hogs get slaughtered and pigs get fat. So we're gonna ride in this trade, getting fat right now, and let's keep it up. So we'll raise our stops also come the end of the day, the trading session today. So we'll have to look at that later. We don't have any options positions on because we are looking, as you can see, we're flat in the Nadex, no binary options. So we are looking for some trades. We right now know that we have the euro trade we're working. The Swiss we're out of. Now this trade here, we're looking to see how this manifests, if we can get a buy signal or a rally to sell into, because it's really tough to sell into these new lows. Also in this trade zone, let's look at the Australian dollar, US dollar. Boy, this one's a tough one. I'll tell you what. Fundamentally, technically, it's way overdone on the sell side. Today we have a nice reversal of fortune, but you can see we opened really, really, really low, just above the lows from Friday, and now we've had a strong day. But I would think that this is more of a profit-taking move, and just because of dollar weakness, I think is really just reining in today as we start the week. And be careful, this could be a head fake. There's a lot of profit-taking that could be happening today. This may not be a true fundamental rotation in the currencies. We may just have a lot of shorts taking off the profits. You look at how we've been riding it. If they're adjusting their stops down like we are during these swings, right now that's what's going on. The market is gravitating towards these stop levels, but that becomes big resistance because of all the you think there's buying pressure, but someone's selling. We're getting out, someone else is getting in. So I think is what we have to really take into consideration. So we have to see how today closes. Right now we have no trade here, unless it's bearish. It's a sell rally forecast. Fundamentally, the Australians are in just a world of hurt. It just does the outlook for the currency looks very bleak for the next couple months. Not that we're not looking for a correction. I mean, this market technically is overdone, but the fundamentals just are not there to support this market. Another thing that can indicate why this is going on in this region also is to look at the New Zealand dollar, US dollar. This market is doing a similar thing to the Australian dollar, US dollar. The velocity of this break has been extreme. This market had been an aggressive bull, and we thought that even with the coronavirus, when it first broke out, that, there might be a chance if something unwinds and happens. But as you can see, containment and other issues have become an issue, and the numbers are getting larger, and it's definitely affecting the country of New Zealand. Now, does this mean that this bearish trend is most likely going to continue? Well, the trend is your friend. As of Friday, we made lower move lows, and right now I would look at this rally. I mean, unless we get above this last lower move high here around 64.93, I can't possibly see how this market would be neutral to higher. I think anything right now, we're set up for a correction to sell, and that would be something like this one here. Like, this was a brutal one here. This one here looked like we were actually going to finally find some support and maybe get a nice little move. Like, the way this was looking back here in the middle of February, it looked more like the New Zealand dollar had a chance of being up here around 66 cents than 62 cents. So this is a big deal. We've extended this break to the downside. The bears are in control. Keep that in mind. So if you're an aggressive bull, use the low from Friday as your risk. Anything below there has this market hammering support. And when it unwinds, you can see what it did on Friday. Very, very damaging. So I'd be cautious using risk to the downside if you're a bear, I mean a bull, excuse me. And for bears, I'd be use caution also right now. We are in a potential corrective phase or the beginning of one, so it's going to be tough. Range traders, I think you're going to have a good opportunity. As you can see today, there's been a nice activity. It has bounced around in this range as well. So now we're going to go take a look at something that is another, I mean, talk about volatility. The US dollar Mexican peso, as you can see, is hovering below higher move highs again today. It's up on the week and on the day already, but it has not made a higher move high. But this market is a bull. Look at this. This market had been trading lower for, well, for a while, and literally looked like it was going to hammer down below these lows some more. Once we broke out to the upside last week, it was very interesting to see this hold here. I mean, the fundamental trade with the coronavirus, I thought that was something that just didn't seem to impact this market, because as you can see, through January and into February, the dollar was losing ground against the Mexican peso while it was just crushing everything else for the most part. Made absolutely no sense. Well, this has made up for whatever didn't make sense, that's for sure. So are we still bullish? Well, yeah, it's hard not to be with higher move highs and higher move lows and hovering right below the highs. So right now, I'd say as an aggressive bull, I would use the low from today as your risk. Any reversal below that would be very negative. If you're a bear, you could say, I guess, use the high from Friday as your risk. Any breakout to higher move highs really confirms strength in this market. And this is the kind of thing, we all know currencies trend. This is something that fundamentals have overridden technicals, and we don't know to what extreme they're going to continue to do so. I think that we're ready for a little bit of a short-term reprieve on it because we haven't seen the numbers in the markets yet completely. Right now, everything is forward-thinking, and we don't know how the spring is going to shape. I mean, for all we know, this coronavirus will start to drop off in a big way over the next month and a half, which means then we're only having this spell of 3 months that disrupts things, not like 6 months to a year. So supply chains that are now finally really getting disrupted, they may be back online within the next month and a half. So what do you lose? You lose a couple months. You're not losing 6 months, 8 months, 10 months. If that starts to become a problem, if we're talking about how the decay in supply chain is disrupted and caused so many other problems around the world, well, then that's a different story. So these fundamentals we have to pay attention to. So it is definitely a variable that you really, really need to just be mindful of. For those of you that have been trading a long time, you remember the SARS. I remember that years ago. I was still on the trading floor then. And it did have an impact, and it did have an impact with trade. The thing that over the weekend they were talking about is just in the airline industry alone, this is already more devastating than September 11th was to the airline industry in just a short amount of time. So, because this is just, it is what it is. And right now, if these numbers continue to be that way, then I would have to say you got to ride this trend out, So U.S. dollar strength is something we have been looking at. We've gone counter trend for the last week and a half. That would not have been a good trade for the whole part of this year, except for the last week and a half, depending on the currency. So the question is, are we running out of gas? Well, we are starting to show signs that we are. So just because we're right at the highs right now doesn't mean that we're not trying to pick a top, but I think you have to be mindful of what's going on with the U.S. dollar. Here's where I want to show you in this trading zone. It also is reflective of this. You can see how the U.S. dollar, especially in the last week and a half, broke out to the upside nice and just kept on probing higher move highs every single day. And now we have today's trade where the market had opened up higher, obviously is lower. It has a lot of volatility. So in one day, we've come off a higher move high that we had broken out to over the past few sessions. And now we've a correction where today's low could be either the next higher move low, supporting this trend upwards, or we are in the beginning stages of a short-term sell signal. If the market was to settle like it is right now, this would be a bearish engulfing line. That would be a short-term sell signal, meaning a neutral to lower trade for the next upwards of 8 sessions or so. Are we ready? Are we trying to call a top here? Absolutely not. We just made a higher move high on Friday, and this market has been very, very strong. But you can see how we had this little consolidation break here. Could we start to set up another consolidation break here? Considering the volatility and the velocity of this move up, remember how we said markets go out like they come in. So if this Friday's trade here, let's make this a different color. This will be a little bit easier to see for you. We'll make it black and we'll make it dotted. Okay. So as you can see on Friday's trade, if this was a short-term top, which right now it technically is, and we look at how the market came in on this velocity, then for it to come back down towards this 132.5 area is definitely in the realm of possibility. How many sessions would that be? Well, that would fit our signal that this would be upwards of 8 sessions. So if we were here, today is Monday, we'll go Tuesday, Thursday, or Wednesday, excuse me, Thursday, Friday, and then we'll go Monday, Tuesday, and Wednesday. So that puts us on March 11th right there. And we'll go like this. Okay. So within the next few sessions, if we were to settle today like where we're at now or lower, that would be confirm a short-term sell signal. And then we would be looking to definitely sell some strike prices in the US dollar, Canadian dollar binary options. And then we'd also look to sell outright the Forex currency. And then we'll look at the futures. Now, here's the trouble with the futures. We're coming into rollover. And this also affects the cash currency markets because as you have currency expirations every 4 months, every 3 months, you have this spread rotation in the futures markets. So you have a lot of buying and selling that cancels itself out as they rotate spreads and stuff like that, which obviously if you're just a Forex trader, you don't really pay attention to. But as having been a floor person for many years and also understanding that they are a mechanism as well in the derivatives markets and you have to pay attention to them, March is when you have to pay attention to it because you have expiration. And that'll be the 3rd Thursday in March. So over the next, especially after a week and a half coming into this, that's when we start to come into what would be expiration time, where we would have a very likely of having something like this happen for about a week. And that would be good. If we get a correction here down to an area that holds above this level here, this would be our key pivot for this trend. This was our last higher move low. Only a failure from here would confirm weakness in this market. And right now, we're looking for just a corrective break. This market is a bull. We're looking for a bearish correction. So we're just looking for a short-term change in trend before, and then also looking for another buying opportunity to get back in on this trend, because the trend is your friend. We have no reason to think that this market is turning, even if it takes it, if it starts to trade lower. We're looking, like I said, for a correction, not a bearish turn in the market, at least not yet. So we have dollar strength that may be running out of gas on this trade. Remember, even Friday there was a lot of volatility. So either what we have going on today is profit taking against the dollar, and then all this stuff is going to turn around in a big way as we go ahead into Tuesday's trade, and then we'll start running into higher move highs or lower move lows or whatever, depending on the respective market. Or we have a potential turning point that is happening as of Sunday into Monday into Tuesday, and we'll see this as it metamorphosizes in other markets. So right now we have this sell signal, and if this does come in later on today, that will confirm a bearish engulfing line and give us every reason to jump in, like I said, and get short. So we'll add to this on the MT4 platform. We'll have another trade on here for you, most likely at the end of today's trading session or tomorrow, depending on when you make the next video. So right now we are pretty much flat. We've only had the one position on the euro, which we're also working. We're raising our stops, so that now we're not going to necessarily reverse. Just because we have a sell signal in one currency doesn't mean we go jumping into another one. We need to have a valid signal. So US dollar Canada, look for this. We have a potential trade set up, but you got to wait until the close. Just because it looks like a bearish engulfing line right now doesn't mean it's going to look like that at 4 o'clock. So we have a lot of the trading day left. There's a lot of bullish support right now. You can see we're right in the middle of the trading range, and we have a very wide trading range at that for the US dollar Canada. So we will have to just have a little patience. So if you're trying to jump, never try and force a trade right now. All we can do is work what's already existing and wait until we have a high probable setup and a real reason to jump in. Always use discipline when you're trading. Okay, so now we've covered those markets. Now let's go and look at the US dollar TRY. We'll look at the US dollar Turkish lira. This is one where this market's been a very big bull. We've been reminding traders that this one has been quite the ride, and you have to have either a lot of experience or deep pockets to ride this trade because of the spread in the trade itself. And as you can see, the market is trading lower, and it looks like it wants to make a turn for a nice little correction. Is it overdue for a correction? I don't know. This trend is very, very strong. The US dollar, I think that no matter what versus the Turkish lira, it probably is going to remain very strong into the next month or two, because we don't know what the extent of the coronavirus in the Middle East really is. And you got to remember, Turkey is stuck right in there between Asia and Middle East. And also with all the trade and the ports and things like that, it really impacts their economy. So how happy the people in Istanbul are right now is, well, I don't know. But if you were traveling right now, if you want to go to Turkey, you can have a really, really good time on it, because you're just on this year alone, you're up, let's see, from the low, let's see, where did we open the year out? We're at 595. So yeah, now we're here at 621. This is a nice little rally that we've had over the past 2 months. So, but because of the slowdown in travel, I don't think that the Turkey is going to benefit from this, from an influx of tourism. So, at least from the U.S., I would say. But what do we have here? We have a very interesting potential sell signal setting up here. Should the market, see, the market opened at 620.80 on Friday. So we're going to put this little line here at 620.80. So 620. See how easy we do this all in real time on our website, the Forex-Trading-Unlocked.com website. Okay, so today's trade, should we settle below this yellow pivot, that would give us a bearish engulfing line sell signal. And that would have us targeting this 6068 last swing low. Will we get a correction to that depth? Well, let's see. We've had corrections already, but they lasted only in a day or so that were close to that. And then we had this fall off here. Now you can see that the real break only lasted for 2 to 4 or 5 days or so before it started to consolidate and obviously build a base to rally again. So right now, this market, a potential short-term correction is definitely on the menu, but unless we have a confirmation with a bearish engulfing line, I would not begin to try and sell into this rally right now. I would even still say that aggressive bulls, you can keep on look for higher move highs. Here's something to think about. We've made higher move highs almost every single day, even if it was a tight grinding little day, up until Friday. Today's trade, we did not make a higher move high, and if we settle, like I said, below this 620.80 area, that would be a bearish engulfing line short-term sell signal, setting this market up for a correction. Now, the depth of this correction depends on if the dollar really starts to unwind versus other major currencies. So we have a counter trend trade setting up here in the US dollar Turkish lira, and then we're going to go back and review these real quick so you know what we're looking at. We have a potential US dollar Canada sell signal also shaping up here. As you can see, we have to wait for the close today. Never try and be a fortune teller and second guess or forecast a signal before it happens. Many traders do stuff like that, and even don't wait the last 15 minutes before the close, before you get a confirmed signal. Start putting on trades thinking they're going to get ahead of the game, and you know what ends up happening in that last 15 minutes? An explosive move, the signal never occurs, and all of a sudden you're in a trade you never should have been in just because you thought you were getting ahead of a trade. So you never want to try and do that. That's not the smart thing to do. It'll only over time cost you money. So live and learn. Don't listen to Teddy and get burned. So right now we have, like I said, those two sell signals that are shaping up. These would be counter trend moves against the dollar that has been very strong versus these currencies. Now we'll also go back to the Euro US dollar. Remember, we are still riding this long. And this one here still seems to be pretty strong, but it too is just hovering above the 50% part of its range. So this one may have run out of gas as well. Remember, we raised our stops. We already hit way above our target prices from our initial buy signal from that bullish engulfing line down here. So now we'll see what happens with the close of today. We will raise our stop once again, or maybe we'll get stopped out. It may be pull back all the way today. We don't know yet what kind of happens over the rest of the trading session. So we'll be eyeing those trades in our next video. We'll obviously have the confirmation of whether or not these signals did occur. If they did, we will be showing you what trades are on, and then we'll have to figure out how to manage them from there, right? So always please check us out at www.forex-trading-unlocked.com. Also, you can please subscribe to us at the YouTube channel and do a search for Forex Trading Unlocked. Check out our YouTube channel there. We got lots of great videos on there, and you can see what we do with some of the financial shows and other webinars for other outlets, and lots of good information for traders there. And then if you want to learn how to execute these trading signals that we were talking about, these bearish engulfing lines and bullish engulfing lines, you should read the book, High Probable Japanese Candlestick Patterns. And if you want to know how to get that, you go to the resources page here at Forex-Trading Unlocked. Check out the High Probable Japanese Candlestick Patterns page. And on this page, as you toggle it down, you can find the book. And you can preview it, or you can buy it, or you can share it. So you can check it out with the preview, as you see, as I press the button right there. Magically, Chapter 1, Japanese Candlesticks. The Chapter 1, it starts out. So you can always do this on any day. Check it out on our website, and then it's available on Kindle and paperback version. And from that, you'll be able to exercise these trading opportunities in the Forex, the futures options, the binary options markets, and even in the equities markets, because there's ETFs and other ways of trading the currencies. And the currencies, no matter what, are a reflection of the biorhythm of the markets, and they help to really dictate in a big way where other markets are going. So with that, we want to say thank you very much. Always check us out at Forex Trading Unlocked as we are your key online trading.